You already know what it is. Welcome back, everybody. Come on down and get them Hollywood trades. I'm gonna do a quick top down on Ether. Uh, Recorrected the imbalance range on the 4 hour. That's the last interaction coming from the interaction with this block's premium range here. We have the premium range also separated into two halves, and so it visited the upper half of that premium and proceeded to go bearish from there. I would say, as expected, after we broke this break of structure here, um, higher low um, or lower high should be somewhere up in here. So we did get the higher lows up in here, but they didn't um, stop hunt anything in this level, so they didn't really have the liquidity to they have to pick up all those orders. They have the liquidity to come up here, but that was never the plan because we were bearish anyway. And after we closed below this open here, we did use that level directly as a mitigation right there, as you can see. And then we left to do the rebalance here. We are holding this range right now, but there's no guarantee when we hold this range or any of these levels. If the bears enter more positions in this range, if the bears enter more positions in this range that they have control over, there's an opportunity for them to add and then waterfall these levels. I wouldn't want to see that, especially after we visited um, these candles, these the lowest bodies for the rally. If we visit those, I believe we should have the power to come and maybe get something there. But these bulls here have to. There's a battleground here for liquidity. It does show that there are more bulls in this range here than there are bears in this range. They're kind of weak bearish range right here, volume node as they would say. So that's pretty much where we are going into the week. We can look at the daily. I haven't really put much thought into the daily here. After we swept this low, we are existing inside of this as a strange algorithmic consolidation range. It's a strange range for sure. Um, I do want to see support from that would be the easiest way because we rebalance this whole impulse here, and so this would be the easiest thing for us to see would be to you know get that bullish motion back going. But that's pretty much it. I don't really have anything else for the week. I should say we are testing this level right here, and um, we also have this level here now. So there's just this real tight range of of testing going on right now. I'm not even going to keep these markups. I'll keep that one. But yeah, pretty much because this is the level. This is really the mitigation level here. So if you put a lot of markups on your chart, it's weird. But I do encourage it as you get used to looking at these candle levels to try to determine some meaning out of it all. Pretty much. But I'm I don't like all that. I just want to know what it's going to do here because this is the lowest candle in the range. This is what I call, obviously. This will be the leading candle of this range here. So it's leading the bearish lows right now. It's leading the chart with the lowest low. So we're going to look at that high and we really want to see what it's going to do there at that high. This is a very strange place we're trading in right now. We do have bearish volume built here. Bulls don't seem like they really wanna add in and take over this range, a kind of weak volume range here. You get a lot of weird reactions in those weak volume ranges, like flip range, as far as I can tell. But that's pretty much it. Let's look at the week. Going into the week, it's just a strange kind of sinking into the lows. This is a key level here. I can put that level. I believe I do want that level on the chart. So there's going to be a pretty good key level here on the weekly to watch. This is really the only level in the range. The body level here, where we started this week. I'll put a little minor mark up there, just because those are the only levels, and this wick level obviously here too. But I'm more so interested in this level here. This whole candle is unfortunately a mother candle range, so we are existing. This market is pointless. We are existing inside of this mother candle range here in this consolidation. That's pretty much how you find consolidation. If you find a higher time frame candle and then put the candles um, in that boundary, highlight that, and if you're in that range, then you're existing within the consolidation range. And I use this markup to just remind myself visually, very visual when it comes to the charts. And so that's pretty much it. I don't have anything else for this. When there's a bearish candle, you can't expect that low to be kind of. I guess you can I'll put just so I can remind myself and anybody else who would be on the onlook of it. We will be looking at this level because this is a bearish candle. So lows of bearish candles um, usually can easily be targeted. The high can also be targeted as a stop high as well. So if we do reach that high, which would be nice for bulls, just to get our action in, if we do reach that high this week, that would be interesting. But if we do print green in this candle, the next candle should print green to this high, no issue. But we're just we had a bearish candle, we're in a bullish consolidation range, but we had a bearish close on the weekly, so and we're existing below the open already. So it's telling us right now, if you just don't interpret too much and just go by what it's saying, it's telling us that it wants, something here. It may not. That's what I'm getting out of it. That's pretty much it. That's pretty much all I have right now. And we're going to take it candle by candle. And we're going to stay on this 4 hour for the time being, just to really remain kind of, on the heavy side. Going down to the 15-minute, 30-minute hourly, it's kind of light-handed price action going into the week. You don't really want to go into the week on those time frames. You get all kind of headaches. I did want to review this real quick as well. I didn't, since we're not even at 10 minutes. Uh, After we got this close right here, this bearish close, there's a minor displacement here. What I do is I'll put a range expectation marker here, and this was the range. This was the whole range. So after we close below this candle will be used as supply. I didn't even highlight the candle's range, but if you highlight that candle's body range, or the range in general, but highlight that candle after it got closed over, that candle would have been a bearish manipulation, bearish engulfing as they would call it. And that's pretty much what you would expect for the candles to fail to close inside of each other at that range. This is what I was more interested in. I was interested in this level here. I was interested in this candle range here, candle range. Target would be the low after we close back inside this range, sweep the highs again, Quasimodo type of situation, and then our head and shoulders. Right, this is what a head and shoulders looks like on 3 higher time frame candles. If you look, there's a shoulder, there's a head, there's a shoulder. It's pretty much a 3-wick pattern on a higher time frame. And then you drop to, right? They say with the head and shoulders, you target where the arm, which this would be the arm on the lower time frame. A lot of people still don't realize that, which is kind of interesting. It took me a long time to realize that a head and shoulders, if you go up on a higher time frame, it's a wick, a wick, a wick, and then it continues. So this, of course, we were interested in this low, and this is the whole range. So we're interested in that low. We kind of want to see where the stop hunts are going to be. Stop hunt, and then right, this is the lowest candle of this drive. So we look at the high of that range, candles range, and then we stop hunt that, and we continue driving until we hit that level, and that's the ultimate level of the range. And so we could say that this candle is expected. This candle is really expected here. Um, it's really expected here, very much at this exact level. Um, you could put it here, but this is the imbalance, and so I'm gonna just clean this up. Might as well do it with somebody watching. Clean this up and get more particular. This is still an auspicious right there. As we go up into the range, I'll delete this so I can leave room for the markups. But I'm gonna drag that over because it's very much expected to be mitigated or balanced, rebalanced, corrected, as they would say. So that's pretty much what I'm expecting here in this range. Um, that's what I would like to see. I would like to see it to fail closing below here in this range, and then we go correct this. That's pretty much it. So that's pretty much what I have. If we close above this, I might. I don't know. Oh, this range is still neatly defined by this low. So that's pretty much it. Hope everyone enjoyed and got something out of that. And we will be tracking this price very closely. Go ahead and hit that follow button. Go ahead and leave some comments. Let me know if I missed anything here. I also could go to my oscillator. Oscillator ain't telling me much, but the average volume is above average, and that we are in a retracement. Yeah. All right. Adios, amigos.